Hi, everyone. My name is Weston Nakamura from Real Vision, and I am here with two very special guests. I am here with Captain John Konrad, who is the founder and CEO of gCaptain, as well as Mr. Lars Jensen, who is CEO of Vespucci Maritime, and we are here to discuss the topic of supply chains and disruptions happening within, and sort of the broader implications. Welcome, gentlemen. Thank you for joining us on Real Vision.
Well, thank you for inviting us.
Thank you.
So why don't we start with you, Captain John Konrad? Can you just give quick background about yourself and maybe a little bit about gCaptain as well?
Absolutely. I kind of had two tracks, graduated at New York Maritime Academy, and I worked my way up to captain on various ships. And then I also did the startup world, started gCaptain and built gCaptain to be one of the largest maritime news sites in the world. I also wrote the book on the Fire on the Horizon on the Gulf oil spill.
Okay, great. And Mr. Jensen?
Yeah, I've been in the container shipping industry for 20 years. Half of that was spent with the world's largest container line and mainly as chief analyst. The last 10 years, I've had my own independent consultancy, Vespucci Maritime. And as part of that, also published a book on liner shipping 2025.
Excellent. And I just want to let the audience know, those both respectively are extremely abridged versions of their respective accomplishments. Let's just talk about this matter of supply chains, because it's gone from the beginning of the year, nobody was talking about it. And then really it wasn't until maybe about 1, 2, 3 months ago when it started to appear in financial media more prominently. And now it is in mainstream media. It is in it is coming out of the White House. It is coming out of Congress. It's coming, it's a global matter. And it's at the sort of the forefront of everyone's mind when they think of the global economy. So I guess, John, let me just ask you, this whole supply chain mess is just kind of just a one simple 70 ships just parked outside of the port of Los Angeles matter, right? Or am I very dead wrong on that?
Absolutely dead wrong. The thing you have to understand about the supply chain is it's really about, to understand this, you really need to understand complexity and chaos theory. Everything's interconnected, everything's globally, logistics, and it's not as far forward as you think as far as technology and really innovation. Things are still operating how they have for decades. And the focus in the media and at the White House right now is on the ports, specifically the port of LA. I wrote an article for gCaptain saying, who put Gene Soroka in charge of national maritime policy? Gene Soroka is the CEO of the port of LA, because it's not just a port issue there. Ports are fixed. The interesting thing about ships can move. We can move the ships to other ports. So there's issues in the shipping industry that are not going to be fixed anytime soon. And a lot of the complexity and problems are in the shipping, but media can't focus on that because they can't bring a camera out 1,000 miles into sea. So they tend to focus on what they can see, and that's the port. But I think this port is the smaller part. It's definitely problems at the port, but the larger problem is the interconnectedness and the shipping.
Yeah, let me expand slightly on that, because chaos theory is absolutely the right word. There's a million different moving pieces all at the same time. And the annoying part of the current problem is I don't see any of the actors did anything wrong as the pandemic rolled out. The current mess is a result of everybody doing everything right. Let me give an example. And mind you, again, this is not going to be all the effects. It's just to give an illustration of this domino effect and why COVID in Europe led to congestion in North America. So picture it this way. COVID hits China. You're in early February 2020. China shuts down. Well, shipping lines cancel a lot of sailings because there's no demand. China reopens. Everybody says, absolutely great. All the ships are lying idle off China. You fill them with cargo, send them on their merry way to Europe, to North America. Before these vessels ever arrive, Europe and North America shuts down. Nobody wants to take delivery of the cargo. The containers now get stuck in all the wrong places. The world starts to reopen again, but then you have another effect. Because when China closed, you see a lot of vessels going from China to Europe. They get cancelled, which makes sense. There's no cargo. But that means a month after cancellation, they don't arrive in Europe, which means they're not going to be in Europe to pick up all the empty containers we need to move back to Asia. So it's a full round trip of 3 months. So 3 months after having making the decision to cancel sailings because there's no cargo, we are not replenishing the inventories of empty containers in China. Now here comes the kicker. During those 3 months, the Americans, and I specifically mean the Americans because that's where the demand boom is, they got bored at home and started buying lots of stuff online. So now you have a bona fide demand boom. So all the containers in China are being filled with cargo to put on the Trans-Pacific. We run out of empty containers because of decisions made 3 months prior. When you run out of containers, freight rates start to go through the roof. When freight rates go through the roof, everybody and their brother says, this is brilliant. I'm going to make money. I'm going to put more ships into the Trans-Pacific, which is exactly what they did. All of this armada of ships are then put to sea out from China, arrives over in the US at the same point where hundreds of port workers are now sick with COVID and the port is not effective. Then the port gets overwhelmed and on you go. Then we are only just in the early parts of 2021. Then in rapid succession, you get the closure of the Suez Canal. You get the closure of some of the world's largest container terminals in China. You get more booming demand. So it's the confluence of all these different events that has led us to where we are now. That's also why there is not one single simple thing you can do to fix the problem short term.
Let's take a look back before COVID and before all that. Were there already sort of inherent structural issues or overhangs that were just simply exposed from COVID and from everything that happened thereafter? Or was this caused essentially by COVID? Problems didn't really exist before. Things were working just fine, as you were saying, or people were doing what they're supposed to be doing. System was fine, but the introduced was a new element of disruption.
Yeah, things were absolutely not fine prior to COVID, but COVID was that straw that broke the camel's back, I believe. There's as complicated as all the factors are, which Lars did an excellent job pointing it out. All those factors go back historically as well, and there are a few really big ones. One is this building of the mega container ships. We went from 6,000 TEU ships, that's 20-foot equivalent unit boxes, to well over 20,000 TEU ships. Maersk started building them with the Emma Maersk and then the Triple E, and everyone else came in and followed. Well, bigger ships require bigger ports. Those ports can easily get inundated. So that's one of the reasons we're focused on LA. There are other ports that can handle these mega ships, but there's not as much slack in the system as there used to be. Nassim Taleb's book is excellent. His series of books, A Black Swan. This is very much COVID, a black swan event, right? And then he has the book, Skin in the Game. Well, a lot of the people do not have skin in the game today. A lot of the shippers, people doing the cargo, they don't really understand the shipment. They just book the cargo. And our governments certainly don't have skin in the game. His last book is Anti-Fragile Systems. He thinks that you need to build systems that can maneuver around black swan events. Well, these mega ships and mega ports like Los Angeles are too big to fail. How many times have we seen that before? And, I wrote the book on the BP oil spill disaster where these complexities and chaos come in. And again, I found in the writing of the book, there was no one to blame. No one did anything criminally wrong within BP or on board that rig, but we had the worst environmental disaster, man-made in history because, and I believe the organization was criminally liable, but no individual did anything wrong. They were doing things right. Same thing has happened with shipping. And go to the 2008 financial collapse. Things are getting so complicated, and we tend to focus on the big money, the big cargo, the big oil reserves, and those big things cause big problems. And then stepping back, Lars had an excellent post today talking about the White House and the White House's concern. I have this excellent book. It's called The Abandoned Ocean, and this is the book on maritime policy in the United States. And Lars might disagree with this on me, but I think through no fault of our own, a lot of the influence and kind of the center of the shipping, it was very much in Europe 10 years ago and Asia. And a lot of those things have kind of shifted into the U.S. Germany was number one in finance 10 years ago. Now it's hedge funds and derivatives in the United States. Media was very much Lloyd's List Fair Play, trade winds. Now it's come to the United States with, gCaptain, Maritime Executive, and a few others. But policy-wise as well, the Secretariat of the IMO is a 2-star Navy admiral. The U.S. Navy has incredible amounts of influence on kind of global policy, and they have focused on China lately. So they're entering into the game and starting to exert that power and dominance. And then the flags of convenience, which sort of run these flag states that run the ships, the flag on the back, it could be Liberia, Panama, Marshall Islands. Those are run out of the United States. But the U.S.'s policy is this. It's been abandoned ocean, and there is no U.S. policy. When Biden speaks, he speaks of the port. He does not speak of the ships. The U.S. Maritime Administration in the U.S. hasn't even sent a representative to L.A. to look over the problem. They've completely hands off. And when senators and congressmen talk about shipping, they're not calling up Lars. They're not even calling him Maersk. And Maersk isn't coming over and visiting the White House or visiting the Senate or visiting the U.S. Maritime Administration. So there's this void, kind of vacuum of leadership where this chaos can kind of get into the cracks because, there's the companies are leading. Maersk is an excellent leader, and they're doing the right things and trying to tell everyone else what needs to be done. But we don't have really a leader in shipping, and we definitely don't have any government leadership, especially in the United States.
When you say that governments don't have skin in the game, this is what you're referring to. Are you talking about specifically domestically within the United States and things like, the Biden administration not visiting the port of LA and just kind of using it as like sort of a stump speech talking point? Is that what you're referring to, or are you referring to more so the international order of things and institutions that kind of govern the seas on an international basis, and the withdrawal of that as governments globally not having skin in the game?
Governments and shippers as well. The Walmarts, the Targets, the IKEAs of the world did not have skin in the game because things moved so well for so many years that they didn't really have to push any political influence. They didn't have to push for leadership guidance. There was no one. The shipping companies had skin in the game, but it's very much towards their end. And it's a very siloed industry. So Maersk had a lot of skin in the game in container ships, a little bit in tankers, but absolutely nothing in cruise lines or bulkers. And the bulk ship companies have skin in the game in bulking. But then you also have things like this ESG initiatives, environmental social governance, which are pushing organizations like the IMO to completely change the environmental and the emissions rules coming in 2030. But the cargo owner, the shipper, the Amazons of the world, they're just starting to realize that they have to get involved here. And they haven't. They don't send people to the IMO. You'll never see Amazon at the U.S. Maritime Administration, MARAD. And you won't, and the countries are very siloed too. So the European Union tends to, they don't visit the shipping companies, and the EU do not visit the White House. The shipping companies in America do not go to Japan or Singapore. So you have the siloed interests where even when you do have skin in the game, it's in a very narrow segment of the industry.
Right. And so, Lars, maybe can you actually expand upon, I know that you're very knowledgeable, but both of you are for that matter, but about the kind of the historic background of how we got here from an international perspective, more so than just kind of what we usually hear about is just the U.S. centered focus.
Exactly. And I think that's important because maybe as a spoiler alert up front, the maritime supply chain is not broken. Not at all. Not in the least little bit. It is undergoing a transition, which was going to happen anyway. Then we have a lot of tactical problems that has nothing to do with the maritime issue. But let me get back to that. So let's just rewind the time. You had a period from basically late 1970s up until roughly around the financial crisis. Keep in mind, container shipping is a very young industry, unlike the rest of shipping. So you had enormously high growth rates in terms of demand every year. You had outsourcing driving it. You had the containerization process, which meant the name of the game there was build more ships, build them rapidly, keep up with growth. That made sense in a high growth environment. Then right around the financial crisis, and mind you, it had nothing to do with the financial crisis. It just happened to coincide with it. We had reached the end point. Everything that should be outsourced had been outsourced. Yeah. It had been outsourced, so there was no extra growth. Everything we wanted to put in containers was already in containers. So from high growth, you get into more mature industry, lower annual growth, which was completely normal. But it triggered several years of problems because the carriers, when you order ships, you get them 2 or 3 years down the line. So when the market suddenly goes from 9% growth per year to 2 to 3%, you end up with a huge amount of overcapacity, which is where we then were around 2010. The container lines have then spent basically the last decade gradually absorbing that amount of overcapacity, getting to terms with this being a mature industry. One of the effects of that is also there was a need to consolidate. The market was still very fragmented by the time of the financial crisis. And the problem is when you are in a relatively commoditized industry, which container shipping is, you will never make money if you are fragmented. You need to consolidate. And that's what the carriers also spend time. When we stood at the end of 2019, we had actually reached the logical endpoint of that journey. The carriers have whittled down from 20 global carriers to 8 or 9, depending on how you define it. And they're collaborating in just 3 alliances on some of the trades, collaborating in other constellations in other trades. That is the logical endpoint. If the pandemic hadn't happened, we would have been looking at a market that structurally would be stronger anyhow, because this is how the industry had developed. And now it becomes interesting because one of the things that's also important to understand here is all the shippers in the world, not just the US ones, all the shippers in the world, and let me provoke, all of them across the board, they have been subsidized. They have been subsidized for decades. There was a good study by McKinsey done in 2019 that showed the container industry, the carriers in general, they destroyed shareholder value to the tune of more than $100 billion over the last 20 years. And you can say, well, that's on them. I rather see it that was $100 billion that was spent investing in building up the industry. That was, of course, never going to last, which meant that you were heading into a period where the carriers were going to make profits anyway. And one of the important aspects here is also, during that growth phase, we have become accustomed to there always being excessive capacity. But nobody wants to pay for it. That's why the carriers lost money. Part of the maturitization of the industry where we had gotten to was, we are not going to see grotesque overcapacity continuously going forward. We're going to be here anyway. So we would have enough capacity, we would have buffer capacity, but it would take less to reach the upper limits of capacity. Compare that to the oil tanker industry. The oil tanker industry is a mature industry, has been for decades. In that industry, it doesn't happen every year, not even every 2 years, but it happens frequently enough that suddenly you have an external event and you have insufficient capacity. Freight rates certainly are known to skyrocket a factor 10 or a factor 20 more or less overnight, and then stay there for a little while and then normalize. Nobody complains. Nobody talks about tanker shipping being destroyed or inflationary pressure. That's just how that market operates, because at the end of the day, absolutely no one is willing to pay to have a huge fleet of tanker ships and oil tanker terminals just in case. What you live with is a few spikes every once in a while where the supply chain becomes stressed and expensive, and most of the time everything is good and low cost. That's where we were heading with container shipping anyway. The pandemic is just an external force much larger than we reckoned. And maybe to add a word on that, I mean, I don't see the pandemic as a black swan event. The pandemic is one of those events that is in the list of risks we absolutely know existed, just nobody took it serious. I had a piece I managed to get published in Journal of Commerce way back in early March, where I took this one on and said, look, there are other potential risks out there that may happen. If they do, it's large impact, but we hope they don't. The first one I listed was, what if a ship gets stuck in the Suez Canal? The second one, just for the sake of interest, was, what happens if we have a major earthquake that sets ports of Los Angeles and Long Beach out of action? So these are all well-known risks, but reality is also, in a commercial market, there is no will to pay to have massive amounts of physical overcapacity. Then we would rather live with short periods where things become more expensive.
That is very interesting. So I'm based in Tokyo, Japan right now as we speak. Let me ask you, is Toyota's famous just-in-time system, is that dead? And was that flawed to begin with?
Flawed to begin with. And again, here I'm talking purely from the container shipping perspective. The normality, here we're talking before the pandemic. The normality was that only 80% of vessels were ever arriving on time. 20% were always late. And when they were late, they were on average 3 or 4 days late. So just in time in container shipping was not really a thing. The only way you can create just in time is to build in time buffers in your supply chain. Then you're basically good. And then the question comes down to how much buffer. Before the pandemic, sure, you could put in buffers of 3 or 4 days, and then all your cargo would arrive as per plan, perfectly fine. But would you put in a buffer of 3 weeks or 4 weeks like you would have to in some ports now? Of course you wouldn't.
I would also jump in there and say, but the Toyota production system is not just about just in time. The Toyota production system, and there's a lot, was a study of maneuver warfare. There's a lot of study of Clausewitz and how, how the German army and the Japanese army was able to invade large swaths of land by maneuvering around big incidents. So like in Germany, you had the Maginot Line protecting France. The Germans didn't go through the Maginot Line, they maneuvered around. So just-in-time shipping, and if you read, really what Toyota talked about, it's, yes, you can get to more fragile systems if when there's an obstacle, a blockage, you can maneuver around it and start finding the easier ways. So it's just as much about being nimble as it is in reducing costs. Unfortunately, the other companies really took just the reducing cost, and they didn't really, these mega companies didn't become nimble to be able to move around the supply chain. So, I don't believe Toyota is to fault. The just in time is okay if you have alternative means to maneuver.
And let me just follow up on that, if you allow me for a second here, because you said the companies were going after just saving money, which I think is exactly what's going to happen this time as well. Because if you look at what is going on right now in the supply chain, all importers are, of course, extending their supply chains. They are making them more resilient. They're making larger inventories, longer lead times, building in all these buffers because right now it makes sense. I bet you 3 years from now, all of those buffers are going to be gone again because it's a cost. Let's say I start a business importing T-shirts. and I'm going to build in the buffers right now because it makes sense. If I still do that 3 years from now, somebody's going to look at my business and say, that old idiot, he's got an inefficient supply chain, going to start a competing business with a more lean supply chain. So all the buffers that we're building into those supply chains now, rest assured, they will be gone when the market normalizes again.
Yeah, it's a great point too. And so let me just ask, when you talk about buffers, when you refer to these buffers, I feel that, and correct me if I'm wrong, that we're currently, as we speak right now, at this moment, we're in a state of overcompensation. In other words, buffers are becoming hoarding behavior, which is feeding into this sort of problem. There is, all right, if I can't order chips for automobiles for the next however many years, I need to, hoard. I need to stock up now. They're not that expensive. I'm just going to order as many as possible, and then that feeds upon itself. So I feel like we are kind of doing the exact opposite, right? And then that essentially is going to grow to an excess to a point where, Lars, as you were saying, somebody's going to come in and say, like, this is a ridiculous waste of, capital or capacity, whatever it is. And then we could just do this a lot leaner. And then that system, kind of the market will recorrect back down to becoming too slim.
Yeah, well, you can say that's the typical bullwhip effect you do get in a logistics chain. And if you look ahead of us now, right now, I wouldn't say there's hoarding behavior on containerized goods. The issue right now is most of the stuff that's imported is actually still getting sold. You still have this massive buying spree, at least in North America. At some point in time, of course, that buying spree is going to come to an end. And if that buying spree comes to an end at the same time where the supply chain starts working again, then you're going to get a surge of cargo into the country at a point where nobody wants to buy it. Then you're going to end up in the opposite situation, what you have now. That is almost unavoidable. And that you're going to get a reduction in buying behavior, I also think is almost unavoidable. Right now, the boom, to a significant degree, is still driven by a reallocation of spending from services over to goods, again, triggered by the pandemic. Over time, it would appear very likely that consumers will revert back to their normal behavior. So reallocating some spending again over to services away from goods. What is entirely unknown is when and over how long a period of time. There are no indications that it's going to happen anytime soon, but at some point it is likely to happen.
And I think stimulus plays a big part, especially in the United States. The funding of money, the Federal Reserve, the Fed funds rate, the cheapness of capital, and there aren't very many investing options to put things in. So companies are investing in themselves, investing in plants, and consumers are spending their stimulus check. And this all goes to the inflationary, is this a smokescreen for inflation? Shipping's getting a lot of the blame now for inflation because that allows the Federal Reserve and the White House to say, this is transitory. This inflation is transitory. Once we clean up the supply chain, all of these problems will go away. But in reality, we're printing a lot of money. And I was interested, Lars, I'm interested in your thoughts on the Biden White House and your comment this morning. And also, as a European, what is your thought on the maritime administration in the U.S.? What role they play in fixing this up?
What I've seen from, and here I would say the administration. Now, I would not say the FMC, but what I've seen from the administration is what I would tend to call a logical and predictable approach from a political level. Here's a problem. How can we solve it quickly? And the problem is, as I mentioned initially, this is not a problem that can be solved quickly. That's the main risk. And there's a number of different proposals. There are also proposals for a new Ocean Shipping Reform Act. I would hope that there would be enough time for them to sit down and try to think through. Because I am not opposed to any kind of regulation. You need regulation also for ocean shipping. But whenever you make new regulation, you should not just focus on what are the good things that I want to accomplish? What are going to be the side effects if I actually go down this path? And that's usually the problem, especially if you want to make regulation to fix large-scale tactical problems, but not structural problems. And what we have now is more of a tactical than a structural problem.
Right. When you have 4-year or even 2-year election cycles, these problems far outlive that, and so that's why things don't need to get done.
Exactly, but let me maybe make it more tangible in terms of where part of my concern would come up. Make no mistake, some of the grievances are absolutely legitimate. I mean, some of the pressure right now comes from, for example, the U.S. agricultural lobby, which I perfectly understand. This is a group of shippers that are under phenomenal strain. Not only have their cost to move products grown up, but that's not really their biggest problem. The biggest problem is not being able to move the cargo at all. So that's a very real and legitimate problem.
And huge amounts of political influence they have.
Yeah, but where I then start to become concerned is when I hear suggestions that on surface sounds good. You could have a suggestion like, for example, you got a mandate that ocean carriers must take the cargo. That sounds good. And my view on this one is typically be very careful what you wish for, you might get it. Because if you mandate that, if I was on the ocean carrier side, okay, that's fine. But then, of course, you got to pay the same prices as the importers. So now you're not going to be able to export a 40-foot box at $500 or $800. It's going to cost you $5,000. So be careful what you wish for.
John, is there any? And I know that we discussed about how this is not a Republican or a Democrat or a liberal conservative position or anything like that. But is there any government solution, be it the U.S. government or any sort of global, I guess, coalition of sorts?
Well, I think Lars says you need to have regulation. In the United States, we do not. We have completely deregulated. The FMC, Federal Maritime Commission, is only really has the ability to look at detention and demurrage and a few other very razor thin. So even if the shipping companies were charging exorbitant rates, which I don't believe they are, it's just, as Lars said, a supply and demand. There's no real power in the FMC. Biden says he's going to give some additional powers in this potential shipping act. But also, we very strange in the United States. That's the FMC. They're not the lead in terms of maritime and port infrastructure and shipping. That is the U.S. Maritime Administration, which is called MARAD. They're under Pete Buttigieg in the DOT. So FMC is under Department of Commerce. MARAD is under Buttigieg. Buttigieg is taking a very forward-leaning response to this. He was just in the port of LA yesterday or on a Zoom speaking of, and they just loaned the port $5 billion. Well, it's incredible. Port of Singapore just built a port at 20 million TEUs. It's going to be a lot larger when it's finished and a lot more expensive, but they built that first segment for $2.5 billion. And everyone says there's no real estate in LA and the environmental laws are too strong. Well, LA is 6 in terms of real estate cost. Singapore is 1. In Singapore, you can't even chew gum. The regulations are so strong. So, where there's a will, there's a way, but we need some of the leadership. And even Buttigieg is not engaging the U.S. Maritime Administration, which is in charge of ports. And I talk to most Europeans, they get confused or they just think the FMC, where MARAD really has, going back to the Shipping Act in 1936, they have an enormous amount of power on the books. But then they got, we're getting into a flatter world, flatter society. We have to work with the EU and these multinational, and, Asia. A lot of our problems are because, these segments and different areas aren't talking to each other. And that's really the IMO. We normally, at this point in the cycle, we start an overbuild process. We start to build too many ships. But we're not doing that right now because of finance and ESG concerns related to IMO. That's the UN's maritime division in London, International Maritime Organization. And they're not really able to pass some of these new carbon initiatives, again, because there's no leadership. And again, because the U.S. has a lot of those votes through the flags of convenience and the U.S. military, which partially runs the IMO. But no one really understands these influence channels, and the IMO is failing as well. So It's again very chaotic, very chaos theory, complexity. But whether it's the Democrats have absolutely no shipping experience. Under Obama, they didn't even fill the maritime administrator for, I think it was 5 years. Right now, in the Biden administration, we don't even have a maritime administrator. He just appointed one, hasn't been confirmed yet. So we're the worst shipping crisis in decades, and we don't even have a maritime administrator. And then as far as the IMO, it's actually the U.S. Coast Guard, which is the military, which is our leadership, United States' leadership in the IMO. So it's very fragmented, and it converts to the Republicans, where we had 3 ship owners as senior cabinet members. Department of Transportation, Elaine Cho, her family is really frontline shipping, one of the biggest ship owners in the world. Wilbur Ross with the Rothschild Bank was a major ship owner, and Rex Tillerson with Exxon was a major ship owner. So Republicans have a lot of shipping expertise, but they go towards deregulation and pulling us out of regulatory. And the Democrats really, going back to the abandoned ocean, they don't really even look at this unless there's a crisis.
I'm going to see that one slightly differently, because I don't see this as a maritime problem at all. I see a global container shipping sector where, if you look on the ocean part with the vessels, we have enough vessels. Vessels are not a problem. Investment in vessels is not a problem. We have plenty of capacity. The reason we don't have it now is because they're all caught up in queues. Why are they caught up in queues? Well, they're outside ports, but actually the ports, even in the US, the ports are not the problem. US ports, sure, they're not the most efficient in the world, but they're not the problem, the key problem right now either. The problem specifically in the US is on the intermodal side. It's the rail, it's the truck, it's the warehouses, it's the inland infrastructure. Trying to solve this problem on the maritime side is to try to address the problem with the completely wrong tools. And when you look at US intermodal transportation, there has been warning flags waved for years before the pandemic of coming trucking shortages of truck drivers, very big problems with enough chassis. This is I was almost about tempted to call it a self-inflicted wound. Do we have problems with trucking and intermodal capacity right now in Europe? Yes, we do, but nowhere near to the extent that's the case over in the US. I don't primarily see this as a maritime problem. The maritime sector, you can say to some degree, triggered this problem because they responded to customer needs. When the market into the US picked up drastically after the pandemic in summer 2020, the carriers reacted as you would in a normal market. There's a huge demand, you put in more capacity. They had the ships for it, that's what they did. The ports handle the ships, that's what they do. But then it came to a grinding halt because the intermodal inland system was not capable of handling the surge.
But is this not what happens when we lack leadership, when we lack looking, that the ports are, we're going to these mega ships and there's going to be fewer ports and those ports are going to be more concentrated. So we need a national maritime plan that includes intermodal, includes chassis, includes when the federal government, goes completely hands free.
No, I would not disagree with that, but that would be a plan for intermodal, not a plan for ships, not a plan for ports, because that is not the core problem. The core problem is on the intermodal side. And that's, of course, where this becomes more a political issue. Do you want an intermodal system that is completely deregulated, where it's all individual private companies? Or do you want one where the government has a very strong hand in trying to build up infrastructure? That, of course, is a more political issue. We can only, for now, say at least these were problems pre-existing before the pandemic. The pandemic has just amplified them, but they are internal, domestic to the US in particular.
Well, what's your thought on the mega ships specifically? A lot of people say, this wasn't a problem when we could utilize a lot more ports. Now there are a very limited number of ports we can utilize because these ships are so big. What's your thought there, Lars?
No, that would be a wrong argument. Again, if you look at it specifically from a US perspective, I mean, when the vessels were smaller, you were still using the same ports you're using now. You're still using Los Angeles, Long Beach. You're using Oakland, Seattle, Tacoma, Savannah, Charleston, Houston, Norfolk, New York. They have always been used. You have not really materially seen that changed in terms of where, large container ships going to the US today go to the US East Coast. They are the 12 to 14,000. You have the typically 8 to 12,000 on the US West Coast. But facilities have been invested in. over the past decade to also handle these ships. I don't see that as a problem. Where you could argue there would be a problem is if you had a port that normally got, say, a 5,000 TEU vessel every Monday and a one every Thursday, and that was it. And now suddenly they only get a 10,000 on Monday. That would cause a problem. But that's not the reality of the ports. In Los Angeles, Long Beach, you would get 100 vessel calls. I actually don't know the exact number per week. Whether you then get 100 or you suddenly get 80, but with slightly larger vessels, is not going to make the slightest kind of difference. Because you've got such a huge cargo flow coming in that it is more or less evenly distributed over the week. And then again, back to my key point, the main choking point you then ram up against is the intermodal capability.
And it seems that clearly, as you had laid out, as far as shipping is concerned, system is actually just working. It's not broken; it's working just fine.
I would say just fine would be an exaggeration.
It's working. Fine is as in it's working as it's designed to work. There isn't a it's the way that it's designed is currently how it's operating, for better or for worse. Yeah. But at the end of the day, though, just I guess to play devil's advocate, and yes, these are two separate industries, but an intermodal system, they are all interconnected at the end of the day. So you do have to be cognizant of the fact that there is a severe shortage of truckers in the United States, and a lot of these structural problems that are happening. Should you not be cognizant of that as a shipper? Once you can drop it off at the port, then it's someone else's problem, and it's Yeah,
you can say you're getting to some of the right parts here, but both in terms of what the problem is, but also how that can be alleviated going forward. Part of the problem here is there's very, very limited transparency between all the different handover points. So I might be sitting as an importer somewhere. Let's just say I'm sitting in California, and I'm buying some stuff out of a warehouse in Shanghai. I want it shipped. And what I then do is I call a container shipping line, say, can you move my cargo down to the port, then I'll take care of it myself, or have a forwarder do it, whatever. The shipping line, of course, responds to demand. What else are they supposed to do? Because the shipper says, I'm going to pick it up at the port, so of course I'm going to ship it. Then the shipper might find out there wasn't a truck, and then we have the problem rolling. And in reality, you might have forwarders at either end, different entities involved, different entities on the ship as you go inland, and there's very little transparency. When I, let's say, as a shipping line, load that box on the port in, say, Hong Kong, I might not know for a fact at all whether the shipper is physically capable of taking delivery of his container if he's the one that then comes down with a truck. There is zero transparency. And that also tees it up to one of the ways not to prevent this from ever happening, but to reduce the risks of bottlenecks is we need to build up systems that are much better at getting as much data throughout all the links in the supply chain, so we can forecast more accurately when are the bottlenecks that's going to appear. I mean, I made a piece, what was that? It must have been somewhere around July, saying that there's going to be a spike in congestion in Los Angeles, Long Beach, because we could see you had a number of new container lines that had announced they would start new Trans-Pacific services, which was in response to demand.
But hasn't Maersk tried to do that with trade lanes? But my people and I worked at MIT the last year on maritime shipping data, and there's no one in Silicon Valley they're really investing in the data startups, the smaller companies, where Maersk went right to IBM, and I'm told that project was a failure, and we're not doing data very well. What are your thoughts?
As far as I know, that is at least part of the intention with trade lanes. Whether or not it's successful, I don't really have an opinion. But part of the problem is you need data from all the different actors. And unfortunately, this is an industry where all actors are phenomenally poor in sharing data, partly because they don't want to. They still believe this is a competitive advantage. I'm not going to show you my cards. And to be quite frank, it's also an industry, and here I'm looking across both shipping and in intermodal, that is still 20 years behind the curve on some parts of digitalization. So they will have a hard time to deliver this data in an efficient manner. That has to change.
It boggles my mind that in 2021 I got a device, a GPS device on my car keys. I lose that, and it goes out to the whole community and finds it. And we don't have any tracking devices on our shipping containers, which is
that's coming. You have like Maersk and Hapag, for example, by now almost having all their reefers with that one on the dry boxes. We'll give it a time frame of 5 years, then you're really going to see that be strong as well. It's coming.
It's good to hear.
But that actually, as I've been looking into this myself, that really kind of struck me too. As somebody from just complete outsider who was, starting from a blank slate, the fact that, just like John said, if it's 2021 or if it's 2001, it seems that, for like let's say the trucking industry, even the domestic trucking industry, it's just a bunch of emails and things that are just kind of floating around, and there's really no system in place. And you compare that to something like air traffic control. Yeah, that's a system that is maybe not perfect, but it at least is a coordinated global system that speaks to one another with different nodes. And that seems to just be not the case at all. It just seems to be a bunch of independent autonomous actors.
But this is also where the genuine complexity of the industry comes in, and also why nothing here is ever black and white. I mean, apart from all the pandemic and supply demand we talked about, the industry is undergoing a rapid digitalization process. And you can say it almost looks like a paradox, because on one hand, as we're talking about here, there's a shortage of information, shortage of access to information. There's a lot of manual processes. However, think back to late March, early April last year, when most of the world shut down and everybody had to work from home. Suddenly, this industry that had been flogged, and I've been part of it, also saying you are way behind on digitalization. Then we sent home, 60, 70, 80% of the workforce to work from home overnight. Yet the entire global supply chain still worked. There were a few kinks here and there. It still worked. We ended up in 2020 moving more boxes globally than we did in 19. And in 21, we're going to move even more boxes yet. So in an industry that is, in many cases, 20, 30 years behind on the digital front, they were able to keep all the wheels turning despite sending all of their staff home overnight.
With regards to inflation, so as of latest, the United States has now a 6 handle on its headline CPI reading. Sure doesn't seem transitory if you keep repeating transitory over and over again over time. But how much would you say, I guess this is to each of you, I'd like to hear each of your answers, but how much of the global, I guess, inflation that we're experiencing, whether it's temporary or otherwise, doesn't really matter, but how much of that is directly, sourced from or originated from these sort of bottlenecks and these problems happening within the maritime system, either directly because, the rates are going through the roof, they're up, an order of magnitude year over year, or sort of, indirectly because of, like I was saying earlier before about sort of hoarding behavior or things like that, or just a change in sentiment or anything like that's not directly tangible. But how much of this is contributing to that, I guess, the broader inflation story?
Let me start out by saying less than people think. But the important thing here is there's actually two very, very different effects here on inflation. If you look at it, especially on the container shipping side, there are some commodities that are not very valuable and take up an extreme amount of space. Suddenly having freight rates go up 5-fold increases their cost significantly. That's a direct inflationary effect, but it's on a limited segment of very, very particular types of goods.
Right. I think I meant the CPI basket, I guess, the consumer price index, not so much the producer.
No, but let me elaborate here, because now it becomes genuinely important. A large part of the goods that would also be in your CPI basket, those are, for example, consumer goods being imported into the US. I can easily have $1 million worth of shoes or more in a single container. If I have to pay a few $1,000s more to move it, it means absolutely nothing. However, and this is where the important part comes in, you can also see or expect an inflationary effect there, but it's very different. Here's what's going to happen. You're going to have some of the importers of high-value consumer goods They're already out now. I mean, you all know this narrative that Christmas is almost canceled. There's going to be empty shelves. So you better hurry up down and buy the stuff before they go on sale. They will never go on sale because it's going to be sold out. Buy, buy, buy. And at the same time, you will also have the sellers of consumer goods. And I don't blame them. This is just good marketing. If I were them, I would also go and say, well, that shoe that you normally buy at $84 is now going to be $89 because, as you can see in the headlines, freight prices have gone up tenfold. The consumer doesn't know that freight price means absolutely nothing when it comes to moving your shoe, but it's a good narrative. The consumer will buy it. So you have one type of commodities where the inflation is directly linked to cost increase. You have other types where it has nothing to do with the supply chain cost, but it has all to do with there's a commercial opportunity where you have a story where the consumers are willing to pay more. Two very, very different effects.
I agree fully. It's smaller than you think in the container world. I think a lot of this is a smokescreen for more stimulus and more looser Fed fund rate, which pushes political. As long as the shippers are to blame, then the Fed can keep printing money. And because of our national sea blindness, and you talk to anyone Navy or Merchant Marine in the U.S., the United States is very sea blind. A country like Denmark, people understand or have a closer connection to the ocean than in the United States. No one understands shipping. There are very few ship captains in the United States. And so they can blame shipping, the politicians, for as an excuse to keep printing money. That's one issue. The other issue is I'd like to bring in, I know Lars' specialty is container shipping, but I'd like to bring in the other shipping right now. A lot of this, the core inflationary worries is not so much the price now, but the increase in risk and the need to hedge funds. Look at, China right now is going through an energy crisis and a potential food crisis. The United States is fairly self-sufficient in terms of food and even some manufacturing, or at least we can continue, without major shipping. But China has to import that food and energy, and they have to do it with tankers and break bulk. And you have a huge increase in break bulk, bringing in coal, bringing in grains, bringing in these bulk products. And you have the United States pulling out of the Persian Gulf and, Iran coming in and starting to attack tankers. It's still it's very stable. I don't want to be alarmist there, but there's more geopolitical risks. And because people, with the Suez Canal, they're starting to understand that, Europe is very dependent on a few pipelines and some major tankers and LNG ships. And, when there are problems, things can get ugly quickly. So I think the businesses are building not just more inventory for just in time, but I think they're building in more margin for these geopolitical risks. And that is very costly and causing some inflation.
Right. And then just to also add to what you were saying about kind of, smoke screens from policymakers, it's also from corporates too. I saw a statistic. I don't remember exactly what the figure was, but something like well over 90% of earnings calls from S&P 500 or maybe even the Russell 3000 companies have used the term inflation to offload any sort of bad news, bad earnings, drop in revenues, margin squeeze, whatever it is. And granted, some of it's probably legitimate, but I mean, it is a very handy thing to have at your disposal.
No, I was going to make no mistake. When it comes to, now I'm not talking about the U.S. exporters, but the U.S. importers, there are a number of very large U.S. importers for whom the current situation is a competitive advantage. Because you have an extreme increase in pricing spread between spot and contract rates. And guess who are getting the good contract rates and the space? That's, of course, the very, very large importers. Whereas the smaller ones, they have to go to the spot market if they can get their cargo moved. So, yeah, the large ones, they also have increased costs, but it's nothing compared to the smaller ones. So this is changing the competitive landscape in the favor of the larger ones. I don't think this is neither good nor bad. What I see here is there is amongst businesses a lot of parameters you compete on. Now suddenly supply chain has become a more important competitive parameter than we've been used to. And that, of course, is to the advantage of some and disadvantage of others. But make no mistake, especially when you look at the very large companies, this will be a competitive advantage for a lot of them.
Let's just, I guess, wrap up with this. We talked about black swan risks, and you also mentioned Nassim Taleb. I saw an interview with him a while ago. I just remembered about this, but he actually said that COVID was not at all black swan because they even made a movie about it or something about having a. So he's like, that was not a black swan. They even everyone saw that coming. But I guess I'd like to ask each of you what would be your respective black swans that you might see that perhaps markets or the public in general or policymakers or the industry itself is either overlooking completely or misunderstanding, if anything at all.
Yeah, no. From my perspective, the largest, I wouldn't necessarily call them black swans, but the largest impacts that is related to the blockage of major seawater. South China Sea being the largest potential worry if something goes sideways down there. The one following that one would be a closure of the Strait of Hormuz, which, from the perspective of container shipping, would sound why? I mean, what's going up there? Well, the thing to remember is you got a major transshipment facility, especially in Jebel Ali, which is one of the largest gateways to the markets of India. So blocking the Strait of Hormuz would throw the entire Indian market in complete disarray.
Yeah, I agree fully. I think the wild card is really the United States Navy and policies are changing. The Navy is very focused, and we spend trillions of dollars on what's freedom of navigation. And, before the World War II, getting shipments from the Middle East to Asia, there were pirates, there were war risks, there were all these other risks. And then the Navy and NATO nations have really come in and squashed down on that. And we've had free transportation and free oceans. But that's really, a lot of that's at U.S. taxpayer expense, and there's not the political will anymore. And the Navy doesn't realize the role they play in the Navy. So the Navy's coming in and stepping into maritime policy. The White House is stepping into maritime policy, but with decades of lost expertise, what the Navy is going to dictate and what the White House is going to dictate, and they're not bringing in the experts. I don't see Lars being invited to the White House or in the Navy, but the Navy's changing policy now. And something very interesting to note is China and the South China Sea has really been saying, very aware of the U.S. freedom of navigation exercises and really trying to push the U.S. out of the freedom of navigation game. But who has benefited the most from free seas and freedom of navigation? It's China. So the Navy's waking up to the realization that the Navy is in part subsidizing cheap global shipping of goods, which is majorly benefiting China. So they're a very high level. And again, at the IMO is a 2-star admiral who's the head of legal and external affairs. And I don't think anyone really understands the role, and the amount of political power by the Republicans and Democrats always fight, but they never fight against the defense budget, right? The defense industrial complex. And so I think the U.S. Navy is the sleeping tiger that's starting to wake up here. And without the expertise, and if the White House does not start inviting Maersk in, doesn't start inviting MSC, doesn't invite experts like Lars, it's going to be the U.S. Navy that brings in that gap. And I don't think that's anything the markets are going to want.
Let me just make one comment there. I mean, piracy is still very much a thing. The worst part is in the Gulf of Guinea off of West Africa. Right now, there's only one warship down there to try to curb it. That's actually a Danish warship. We're the only ones that sent something down there.
Well, this has been fantastic. This has been very insightful. Can you both kind of share to the audience, if they want to, follow your work, where can they find you? John, where can they find you? gCaptain?
Yep, gCaptain.com, and we're on all the social media, or John Konrad on LinkedIn and Twitter.
And I'm on Vespucci-Maritime.com, but follow me on LinkedIn. That's where I put all my almost daily updates.
Fantastic. Thank you so much, gentlemen. And we hope that these kind of, these knots untangle, but I don't think that, it's coming anytime soon. So be very interesting to see how this all unfolds. But thank you for coming out to Real Vision with us.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.